yeah.
Woke up, checked the charts, felt like a king. Portfolio screaming, my phone doesn't ring. Buy the dip, they said, but the floor disappeared. Now I'm stuck in a trade that could last me a year. Every candle's a lie, every wick is a joke. I leverage too hard, now I'm breathing in smoke. The market's my dealer, I'm hooked on the pain. They give it, they take it, then laughs in my name. I catch the knife, I call it fate. I bet the farm, they liquidate. My broker laughs, my screen turns red. My wife just packed her bags instead. I hedge my risk, it breaks my knees. I short the top, it rips with ease. I catch the knife, I call it fate. I bet the farm, they liquidate. My faith in a Twitter thread, 100x long, now my cash is dead. My stop loss didn't set one, bro. Now I live in my car with a monitor glow. Every candle's a lie, every wick is a joke. I leverage too hard, now I'm breathing in smoke. The algo's a demon, it hunts where I trade. I click on the bid and my soul gets erased. I catch the knife, I call it fate. I bet the farm, they liquidate. My broker laughs, my screen turns red. My wife just packed her bags instead. I hedge my risk, it breaks my knees. I short the top, it rips with ease. I catch the knife, I call it fate. I bet the farm, they liquidate. Expired, my puts got burned. Took out a loan, now my lesson is learned. I paper hand once, it triples in price. I diamond hand hard, it flatlines. Nice. So I scout for scraps, I dream of gains, but the market just laughs while I go insane. One more play, just one more round, and if I lose all, I'll double down.
Oh, brother, oh, brother, oh, brother. Welcome back to another episode of the Matt Kohrs Show, where I should probably start today off by apologizing. I'm sorry for sounding and looking like shit, but it's in fact because I feel like shit. I don't know what I got up to over the weekend, but your boy got caught with a cold. So we're currently dealing with that, putting as much Dayquil and Mucinex and electrolytes into the system as legally possible. And that's just what it's going to be. So it's definitely been worse. I'm not here complaining. Obviously, I know it could always be worse, but it still sucks. Like, I feel like it's more of like just this giant head cold, and I guess something's going around. I'm finding out now that in many places in the U.S., there's some sort of head cold going around. There's a separate stomach bug going around. So if you happen to be dealing with it yourself, well, hey, I'm right there with you. We are Dayquil brothers. Oh, nice haircut. Thank you. I have to admit, it kind of did take away from my excitement of getting a haircut because I was so jacked up to get one on Saturday, and then I started feeling like crap on Sunday. So I guess it is what it is. It is one of those things. But folks, we don't need to, I guess, focus on all the aspects of my life that aren't panning out exactly how they should. Folks, you know who did have a phenomenal weekend? Chaos. He is in chat. He's the producer of the show. He is the man behind all that amazing music you get to listen to, which, shout out, today's song absolutely slapped. But folks, he just turned 25 over the weekend. So if you see him around in chat, if you see him around in real life, wish him a happy birthday. You just missed it, turning the ripe age of 25. He has so much life ahead of him. You know, just seeing him grow up when we found him in the forest, just a barbarian of a human, and then we refined him into the gentleman that he is today. And we finally, for a couple of years there, we kept him in a basement because he was borderline feral. But now that he's adapted to the ways of being a human, I think it's worked out well. So like I said, if you see him around, make sure you wish him a happy birthday. And on that note, we have, I guess, 3 separate wars to discuss. And I don't know which one you think is the most important, so we're going to cover them all. We have to talk about World War III with U.S., Iran, Israel, and everyone else who's involved. We have to talk about the prop trading wars, Apex coming out with massive changes to their programs, huge updates. We're going to be going over that today. And then obviously the third war is the, I guess, war going on within my system. So at any random points today, if you see me just turn off my camera to vomit, if you see me turn off my camera and you hear me blowing my nose, just understand that there is in fact a cellular war going on in my body. So we're going to be doing our best to contend with all of it today. So I do hope you had an amazing weekend. Finally, the weather getting a little bit better. Well, at least it is if you live where I live. So I hope you had some good weather. I hope you had some good time off. I hope you got as much rest and relaxation as you possibly could have, especially with the endless amounts of doom scrolling that we were probably all doing over the weekend. So I know you didn't get any rest, but here's to hoping you did get some rest. And on that note, I guess we should get ready for the upcoming trading week. All right, let me see if I could do this very quickly. I want to be in the bottom right here. Let's see, did I do that right? I do want to let you know I'm in a position. I've been trading a little bit. I tried first trade this VWAP rejection breakdown, didn't happen, got knocked out for break even, had a little bit of a losing trade. It popped up, rejected again. As you can see, I attempted the shorts again, locked in some. I currently have a runner that's in the money. So worst case scenario is I make $200. I was up quite a bit more on this crack of 600, but obviously this bounce, a 50-point bounce, unfortunately not the best for me. Do I just want to close it out now? I mean, honestly, with how I'm feeling today, I could end today every account up $500. This was just a run-of-the-mill VWAP rejection. Like I said, my stop's already in the money. Worst case scenario is I make about $300 per account. I am trading on Tradeify, Take Profit, Lucid, FFN. I know today I've already alluded to Apex. And I just want to let you know, because obviously, rightfully so, you guys are going to ask this question. I haven't heard from them yet. I have a feeling between all of the drama with the previous influencer who got caught cheating, with all these new accounts, it sounds like they are just as a company very busy. So unfortunately, as of tomorrow, I will be frozen out from Apex for an entire month. My accounts were frozen out on February the 3rd. So we are literally a month at it at this point in time. Like tomorrow will officially be one entire month, and it just is what it is. I understand that it takes a while, and it's just one of those things that I wish it did happen overnight. Of course, if I had a magic wand, I would love for that to happen. But I also do simultaneously understand why the process takes so long. So it's one of those things that I'm still just waiting. I'm waiting. I am waiting. So, of course, today we will be going over the other Apex news, the brand new accounts that they're doing, the rollouts, what it means, what it doesn't mean, the good parts, the bad parts, and just the neutral parts that are just generic changes. We're going to be going over that, of course. But I just wanted to keep you guys apprised to my situation where, yeah, I'm still waiting. And it is, as you're about to see from the new rules, I might be, if approved, fingers crossed, knock on wood, if approved from Apex, I will probably be the final person who gets $1 million payout from their sim accounts. And that's just basing it on the new rules where you can't run up accounts anymore. You have to get pushed over to live. So it's a completely new process. But in the event that I do get approved, It'll be, if you had this like running ledger of all the people to get 7-figure payouts, your boy, old Matty K, will be the final person to do so. So hopefully that becomes a reality, but obviously it's going to take time to figure all that one out. So anyway, let me do my job. I just want to show you I'm short at 64.75. My stop is at 60.50. I already made a little bit of money on the day. I did want to show you this. I never got to show you this on Friday because I had a horrible trading day. But I built out this trade chart trader myself, free trade. Boom, moves it right to break even. If you don't have an order there, boom, puts in an order at break even. So really, really stoked. This was all via the help of AI, specifically Claude. But I built out my own chart trader because I'm such a fan of moving my trades to break even that I wanted to put break even trading right in my chart. So right there, free trade with the old exclamation point lets me know that I'm taking all risk off the table. Obviously, like I said, one of my absolute favorite ways to trade. So built that out last week with the help of AI. You know, what can't it do? Anyway, let me do my job and get rocking with you folks today. Dow futures drop over 500 points as oil prices spike following the U.S. attack on Iran. So unless you're living under a rock, and not a rock like IRAQ, a rock like A space ROCK, and did not pay attention to the news over the weekend, we are in a new armed conflict, this time with Iran. So early Saturday morning, if you live on the East Coast, the U.S. government, in conjunction with Israel, carried out an attack on Iran, and very quickly, I guess we'll call it eliminated, for lack of a better term, eliminated some of the leaders, specifically the Ayatollah, the supreme leader. Trump spent years denouncing U.S. intervention. Now he's toppling foreign leaders. Whether you agree with it or not, you have to admit Trump is on quite the heater. You're talking about the leader of Venezuela, cartel leaders in Mexico, and now the leader of Iran. All gone. So far, we are 3 for 3 in the first 3 months of the year. He's on a heater. He's definitely on a heater with taking out world powers that he thinks are obviously, or maybe not just him, but his administration thinks are a danger to the U.S. and the rest of the world. The most recent is the leader of Iran. Iranian state media confirms supreme leader is no longer with us. He has been unalived, and this is what he looked like. And now, to my understanding, he's under a bunch of rubble. Iranians take to the street to celebrate the Ayatollah's death. Some Iranians said on social media that they were privately mourning the supreme leader, but displays of exuberance broke out in cities across the country. You know, maybe it's just because there's too much Dayquil coursing through my system right now, but I don't understand. So as a person who was formerly in Manhattan, you might have missed the fact that there were parades and protests within Manhattan over the weekend, kind of saying, we're sorry, Iran. We don't all stand for this. Like, we're so sorry you have to deal with it. They were kind of upset about this development. And New York City wasn't the only place. We also saw this happening in Los Angeles and other major urban areas. But what I don't get is in the U.S., maybe not all of them, but some of these protests were along the lines of, we're so sorry, Iran. We should have never done this. We feel for you. And then you start to look at some of the videos and commentary from people in Iran, and they are so stoked. They're finally, the throat is off our neck. Let me remind you that the previous leader of Iran, who was taken out Saturday morning, was also directly responsible for anywhere from 35 to 38,000 deaths a mere couple months ago because he didn't like that people were protesting against him. So he just mowed them down. Anywhere from, the estimates right now are 35 to 38,000 mowed down for protesting. This guy wasn't like a good dude. This wasn't a guy who everyone's like, hell yeah, we're so stoked that he is leading our country. He murdered many people. And then yet in the U.S., I don't know, like, did everyone just Saturday morning get onto Amazon, order an Iranian flag, and just say, hey, we are on that side? I understand, like, if you go on Twitter, this is a very, obviously for good reasons, touchy subject. I understand if you're generically against this because President Trump, for a long, long time, basically ran on this concept of no new wars. So if you're like saying, hey, I understand that what was happening was in Iran was bad and it was a humanitarian issue, but you could also maybe take the argument, but the United States is not the world's police. And if you're of this mindset that you're the opposite of a war hawk and you just don't want to get involved in a new conflict, I understand that. I 100% understand that. But this idea of you don't want to get involved because you think what was going on in Iran is like completely fine and there were no issues with it. Well, that's wild. That is just completely opposite of what reality is currently telling us. So I found the reaction of people on the ground when they're cheering with exuberance, same thing as in Venezuela, of like super stoked. Finally, we have a chance to maybe like live a life. We're seeing similar actions in Venezuela as we are in Iran, where the people on the ground are excited. And then yet people in the U.S. are protesting it. And they're not protesting it because of this concept of the U.S. being the world police and maybe just some sort of political opinion that that's not our right to do. But it's more of the opinion of like, no, the person leading the country was a good guy and we need to protest that. I find it crazy. And like I said, maybe I'm just completely misreading the situation. As I promised you, my brain is chock full of Dayquil right now. So maybe it's because they have Trump derangement syndrome. It might be that. I mean, I've seen some jokes and maybe they're not jokes, but I swear over the weekend, someone was trying to make the argument that if it were the 1930s and Trump went in and Trump's administration was like just in this hypothetical situation, the president, they were in control at that time. If they went in and took out Hitler, like the modern day people would still be like, how could you take out the German leader? That's a sovereign dude. And like, what are you talking about? And it makes you wonder. It really, really does make you wonder that regardless of what he does, and I'm not saying everything he's done is good or bad. I think the mark of being a mature adult is understanding that he's made good decisions. He's also made bad decisions. And I think that blanket statement is probably true for every administration ever. They've probably done things you agree with. They've probably done things you haven't agreed with. The fact of you fully agreeing or fully disagreeing with administration ever, there's just no chance. There is literally just no chance that you could fully agree or fully disagree with any administration in U.S. history at any time. They're making too many decisions. There's too many nuances. You might like majorly agree or majorly disagree, but I deeply believe that if you are the biggest Trump supporter in the world, I could still find things that you don't agree with. For example, his own meme coin. What? He just dumped that on people, cost people like a lot of money in net, millions and millions of dollars. It is crazy that the administration, the leader of the free world, had his own meme coin. Even the biggest Trump supporter should be able to reasonably say, that was a little messed up. And then on the flip side, even if you're the biggest Trump hater, you could probably say that, hey, maybe like, I don't know, getting us into a better trade position, maybe liberating a country from a brutal dictatorship. Maybe we could say from a moral perspective that those are net good things. So I guess the way a lot of my opinion of the stock market of, okay, we need to approach it in a way where we're not 100% with anything at any time. There's a lot of unknowns, there's a lot of variables, and we have to understand the variance of the situation and understand that things could go awry at any second. And maybe this world isn't so black and white. Like maybe it's large areas of gray, and that's predominantly where we live. So the way I apply that to the stock market, I kind of also apply it to politics. Folks, I'm not in there. I'm not making these decisions day in and day out. So I think it's one of those things where, and we're not even getting into the depths of the fact of like how much these stories are skewed by mainstream media. So we're sadly at the point of like, we do have to question what we're seeing, what we're not seeing. So There's so much to it, but I mean, at the end of the day, I think more of the craziness is what I'm seeing here in the U.S. Trump pushes for new Iran leadership as Tehran stays defiant. So as recently as this morning, so the Department of War, Hegseth, he was talking this morning. And then on top of that, Trump was speaking yesterday that they apparently have already identified a new leader, and Trump is willing to speak with him if he's quote unquote going to be pragmatic. So that update could happen at any moment in time. So pay attention to that. More so recently from Trump on U.S. troop casualties, they were likely to be more. Trump said operations will continue defending the mission as the duty and the burden of free people. So once again, like, if this is why you're against it, because you're like, hey man, I don't think U.S. lives are worth anything, especially in the Middle East and this conflict that is like literally never ending. Hey, I understand that argument. I 100% understand that argument. So, but on the different side, like, dude, that's not what I'm seeing the protests for. I'm not seeing right-leaning Trump supporters protesting this saying, hey, you said we're never getting in a conflict. The protests that I'm seeing, at least in Los Angeles and New York City, are like, no, the dude leading Iran should be leading it. And what's happening over there is, I guess, good to be happening. I don't even know what their words would be, but it is a crazy situation. And obviously there are very, very far-reaching implications. More U.S. troops on way to Middle East, according to Kane. And then on top of that, there was some crazy accident. Where was it? 3 U.S. Jet fighters mistakenly shot down over Kuwait. So literally mistaken identification. So that's some of the hot news as of this morning. As you can imagine, oil spikes in Middle East. A war all but halts Hormuz ship strait. So this particular strait is a major aspect to the shipping route for oil. And right now, there are hundreds of ships who just dropped anchor, and basically oil is not being transported. And as you can imagine, when supply is constrained and demand remains the same, well, prices are going to spike. U.S. crude oils jump as much as 7% on fears of Iran supply disruption. Well, it's already happened. So oil closing out last week around 67 a barrel, at one point spiking as high as 75, currently trading at 72 and change. It is up 7.8%. And of course, this is just going to be oil, but other movement as well. Stocks are down. The SPY is currently down 1.1%. The Qs are down 1.5%. Gold was up quite a bit more. In real time, it's giving some back. And then obviously I wanted to put oil up as well because that might be a good indication of what's coming on. The other thing you might want to watch today is volatility. The VIX is the volatility of the S&P 500. Closed out last week just below 20. Early, it hit around 25, currently trading at 23.50. So we're seeing volatility up. We're seeing oil up. Gold was up, giving a little bit back right now, but overall still green to the tune of 2.2%. We are seeing equities down. And then the final sanity check is crypto, which is also down. So crypto got up to 68. Bitcoin, I should say, got up to 68, currently trading at 65.4. So across the board, we have quite a bit of movement in the market. Matt is right-leaning. Depends on the subject. I mean, I'm not just generically right-leaning. I think depending on what you talk about politics, at one point in my life with my same opinions, I would have been considered left-leaning. But obviously, the political lens and the political landscape shifts a lot. I deeply believe my opinions haven't moved that much. I think more so of what the movement has been is like what we call left and what we call right in this country. I mean, I deeply believe a decade ago, with the exact same opinions that I have right now, I would have been considered left-leaning. I deeply believe that. So I guess in the current lens of things, yeah, but that doesn't mean I fully agree with everything going on at all times. And that doesn't mean I'm fully against some of the left-leaning things. Like, it's just one of those things. Be an adult. Like, just like use your brain here, folks. Sometimes you're going to agree with things. Sometimes you're not going to agree with things. That's how life goes. Anyway, very quickly, I do want to remind you before we get rocking today, and I was talking about this in the Discord when I do a daily write-up in the Discord. I understand with events like this, sometimes there is an emotional thing of this has to be bad. We have to go short. I need to buy protection. I'm going to make money betting on the bearish situation. I want to let you know to not let your emotions lead that. Yes, maybe intraday, if you see a minimal risk, high reward setup and you want to go short, I'm not telling you to not be bearish today. But what I'm telling you is that many times when there's events like this, people choose to panic. And inherently, there is a saying in the stock market that the S&P 500 has never lost a war. So 3 months out, 6 months out, 9 months out, 12 months out, whether it's World War II, the Gulf War, Korean War, Iraq War, Vietnam War, or the Russia-Ukraine conflict, I don't think they're technically calling that a war, every single one has gone up. Every single time the stock market has gone up. Now, obviously, I know this is day one and there might be some frothiness, volatility's up, gold's up, oil's up. So yeah, like maybe today is a red day. That's not what I'm saying. I'm saying looking at your long-term investments, looking at your medium-term swing trades, if you want to be bearish 3 months out, 6 months out, 12 months out, like have at it. But I'm letting you know that you are very much fighting against the trend. Because every single time in history, when it comes to U.S. conflict and the U.S. stock market, we have been green every single time, 3 months out, 6 months out, 9 months out, 12 months out. So I just want to put that on your radar. I find that there's a lot of emotion of like, oh, it's going to crash and we're never coming back and yada, yada, yada. But please understand you are fighting against statistics. I understand there's this idea of emotion and people getting spun up, but sometimes you just have to dive into the stats of the situation. So hopefully if you're looking at your long-term account this morning and you're seeing red and you're feeling uncomfortable, I hope that how the market has played out historically maybe offers you guys a little bit of comfort. Now, if you haven't already, sign up for the newsletter. It is 100% free. You've never had to pay for this, and you never will. Every single Sunday to your email inbox, you get a breakdown of what's going on in the market, cheat sheet for all the major earnings. This week, you might care about Target tomorrow, Best Buy, CrowdStrike. You might care about Abercrombie. Broadcom's the biggest one of the week. That's after the market closes on Wednesday. Costco, Kroger, they're also going to be big ones. Maybe you care about Webull. So we are still technically in earnings season, even though almost all of the S&P 500 has already reported. The last one of real importance is Broadcom, the second biggest semiconductor ticker in play right below NVIDIA. I also give you all the major macroeconomic events today. 9:45, you're getting some manufacturing numbers. Also, again, at 10 a.m., you're getting more manufacturing numbers. With respect to seasonality, the bulls have won this day historically, 68% of the time over the past 28 years. But obviously, this one might be a little bit special this time around, beings we were in literal armed conflict with Iran. So keep that in mind. Let me get things set up just so we can see the exact market open. I will put up gold and oil just to watch out of the gate to see this craziness. How's my position doing? It's green, so I can't complain. It's still green. Let's move this down a little bit. I don't want to get knocked out, especially because market open. If market open gets crazy, I'm going to make an extra $100. That'll put all my accounts at $300 on the day, assuming that there is no slippage, but there also might be an extreme amount of slippage because this is going to get nuts. The market's going to open in 45 seconds. If there's a dump out of the gate, hey, I might make a lot of money. And if there is not a dump out of the gate, as you can see, I'm short one NQ contract, but my stop's already in the money. So I'm just protecting myself in case all hell breaks loose. And the way this is trending, it actually might knock me out before the market even opens. It might knock me out before the market even gets going today. As you can see, I am short at 64.75. One contract short. Stop is already in the money. Let's put it at 60 flat right there. But we're trading at this could so easily knock me out. It's pure luck at this point. I guess it's skill that you could say my stops
Order filled.
Yeah, it knocked me out. Well, hey, I made money. I'm green. I did my job. I was in that for a while. And of course, it goes as high as 63 just to dump anyway. Isn't that just my luck? Anyway, dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly. And if not, have fun. Wow, that's a bummer. It never actually would have hit the break even. It got as high as 6. Wow. Some of those trades you wish you could just have back, but that's all right. I'm happy that I'm green anyway. So If you're joining in, obviously today is going to be a little bit nuts. I should show you these are all the key levels I'm paying attention to. We opened up at 6,800. The transition zone is between 6,850 and 6,900. So the fact that we're on this side of it is a bit bearish. As I always do, I mark out the previous trading sessions high, low, and close. That is the green, the red, and the white lines. Once again, the previous trading session, i.e. Fridays, high, low, and close. And then the final thing on your screen are these yellow horizontal lines, which is where all the big money is positioned at. So whether it's a big positive gamma node or negative gamma node, I marked all those out because ideally you're going to get a better concept of where to pay attention, because that's where big money's positioned. So we opened up at a very key level, 6,800. If the bulls keep going, 6,825, and then the upside gap fill at 6,832 is in play. Once again, there is a gap fill today. As you can see here, this is the daily chart for the S&P 500. The low on Friday was right about here, 6831.74. So it's called a gap fill because there's a literal gap in the chart. Like right here, you can see today's high did not get really anywhere close to it. So we have 6-7 points to go to get that upside gap fill. So you can see it on SPX. It's going to be visible on SPY as well. You can see it right here. There are various upside gap fills in play. On SPY, it is 681.64. On the Qs, we actually almost got it on the Qs right there, 602.19. So there are various upside gap fills. If you want to play it, hey, good luck. Good luck to you. I hope you make a buttload of money. My play already got stopped out, and it was a good stop out. I got stopped out at 60, locked in $100 of profit, and if I held it to this moment, I would be down by, just $2,000 per account. So was that a good stop out? Without a doubt, it was a good stop out. I'm not going to complain about that one at all. Just trying to have better risk management. On Friday, I had horrible risk management. I had decent trading on stream with you guys, but just to be transparent and keep you guys, I guess, in the loop on this one, after stream on Friday, I managed to get fully tilted, specifically in the afternoon, and just I got destroyed. I know it looks like there's more green than there is red, but please understand that I had to, these were all the accounts that are green are evals, and some of them I blew out and had to restart them, and then that's why you're not seeing them there, because I just reset the account and then it was able to trade them. But you could see based on what I made, it was basically the first day they were trading because my realized P&L was added on to the base value. So what's not shown here, and I explained that in this, is just that I lost accounts. And then the really unfortunate thing is I lost all of my funded Lucid accounts, which was just, it was a travesty. Because if I traded today, all I had to do was make $250 on all 5 of these accounts today, and I would have been able to request out $15,000. So massively, massively bummed that I fumbled that, not necessarily at the 1 yard line, but it feels like I fumbled it at the 5 yard line. So I just wanted to let you know that, yeah, we have a lot of good days in here, but not every day is necessarily amazing and awesome. So I did mess it up on Friday. We just got the upside gap fill on Qs. The NASDAQ just got that upside gap fill. That's pretty nice. Let me go over to this one. There is on NQ, the NASDAQ futures market, there's another gap fill to 24,952.75. So you might want to mark that one out. Dip buyers are coming in. And this is what I was saying before, of like, when we get this conflict, the whole world gets spun up thinking it has to be negative. But I mean, right here, imagine how funny it'll be when the market goes green. I tweeted that yesterday, and it's just at a certain point, you see this type of stuff time and time again. And just when the consensus trade is that, it has to be bad, everyone panics, and then they put it on a protection position, and then it gets blown out. And then to cover that protection position, they end up quickly running the other way, and it basically has like a Vanna rally effect to the upside, especially when you get these downside gap fills. We almost got the upside gap fill here at 6,831. So watching this is the low that we saw around 9:40 in the morning here, 6,831.74. We're going for it. About to get that gap fill. Or I'm curious. How many of you are playing the gap fill on the SPY right now? If you already played it on the NASDAQ, congrats. You've already made your money, so you're probably already done for the day. Huge congrats to you. But I'm curious, how many of you still are in the upside gap fill for the S&P 500? Venus, you're in it. Who else is in it? Who else? Is anyone in Discord? I'm happily neutral. I want things to settle. The experts don't know shit. Of course they don't. Sitting on my hands, still in NQ, trailing. I'm shorting tulips. Hey, don't you do that. Was short like you, so no. Up 5K so far. The gap fill, that gap filled fast. Yep, well, we got it. It took about, 5 to 6 minutes? Looks like there's another gap on NQ all the way up to 24,952, which is about 90 points above where we are right now. Maybe not the worst play. Do I want to play that? Do I want to play that? Yes, no, maybe so. Yes, no, maybe so. Just so you guys know, over the weekend, Apex completely revamped their offering, completely revamped their website. They changed a ton of stuff, and I will be going over that today. I just want to do it when things settle down a little bit more, but I just want to let you know that in case you missed the news and you're logging into Apex today, it's basically an entire new system, an entirely new offering, an entirely new company. So we're going to be going over that today. The TLDR is this. I think the changes are net good. Are all of the changes amazing? No, that's just not life. But I would say in the net situation, they are good. But what I really, really like is they got rid of the MAE. They got rid of the 5-to-1. They're trying to get closer and closer to automatic payouts. I love it because there's a lot more clarity. It feels like they're going to have better communication. But there is one particular rule that I'm not the biggest fan of. The DLL, the daily loss limit, is a new rule that is new for Apex, but it's really, really popular on other firms. Like you can find it in a lot of places in the world. So basically what they did was they instituted the DLL, but now they allow you, the trader, to have instead of trailing drawdown, you would now have end of day drawdown, which is phenomenal. So basically, they switched out one rule that, like, I don't know. I never trade accounts that have DLL and intraday drawdown. Like, I think that's just predatory. So what they did was they had one rule I don't like and switched out for another one, but got rid of the first one. So like, I would say that that's just where we're sitting now. That's where we're sitting now. So I'm not a big fan of DLL, but I also wasn't a big fan of intraday trailing drawdown. So now they have end of day trailing drawdown, which is awesome, but now they have DLL, and that's the trade-off. It would probably be, from a business perspective, really not the most, I guess, possible for them to remain in business if they had no DLL and end of day drawdown. That would probably be a really tough thing. They might be running at a net negative. So DLL is fine in my opinion. I don't agree with it at all. I understand if you want to implement it on yourself as a trader, but just to get completely frozen out for the day when, like, hey, you might have just had a couple bad trades in the morning, and what if the trend is coming later? Not the biggest fan of it, but of course it is very avoidable if you just size down. So if you size down, you don't like, I'll talk about this today. We are going to go over all their new offerings, what it means, what it doesn't mean. So right here, this is, you can check it out, but we're going to be, they have two new accounts, end of day trailing drawdown and intraday trailing drawdown. As I'm about to show you, you're very much going to want end of day. Like, in my humble opinion, these are by far the best accounts to have. And I would say specifically the 150K end of day trailing drawdown is where you want to be. In my opinion, that's where you want to be. The 6 payout cap is horrible. Not really, because you can then get moved to live, and then it's the same thing as it was before. It's just, instead of them taking on the risk, they're going to be in the market with you. It's going to be an Apex account that's live. But I want to be honest here. They still haven't rolled out all the information on what the live account is, but I have the numbers somewhere. I think there's a lot of people saying the 6 payout cap is horrible, but in reality, how many times have you ever gotten to 6 payouts anyway? Like, I mean, on a 150K account, you're still getting paid out $410,000. And on a 50K account, you're still getting paid out $260,000. So, like, before people get up in arms about how dare you, well, be honest, did you ever get to 6 anyway? And even then, even if you do, it's not like you're just done. All you do is then go to a live account, especially if you prove that you can do it consistently with a good system. Then you go to a live account and it's the same thing as before. However, 2K drawdown, not 2.5 and 150 daily loss. Yeah, so they did lower that a little bit, which is why I specifically said I believe the 150K end of day drawdown account is the best account now. 6K payout max is 13K. Yeah, do you know how to multiply that by 20? Michael, quick math question for you. What is 13K times 20? Is it the $260,000 number that I cited for you? Is that it by chance? Is 13,000 multiplied by 20 260,000? Do they consolidate the 20 funded accounts into a single live account? We don't know yet. We don't know. That information, I'll go over it. I promise you. I have all the information up here that is currently publicly available. We'll be going over it today. We could discuss it. We could figure out the good parts. We could figure out the bad parts. Overall, I do want to make my opinion clear that I think these changes are net good for the community because it's going to increase the levels of communication and decrease the levels of frustration where people aren't quite sure of why they got denied or something like that. I think the fact that they are simplifying the entire thing is going to make for a better trading experience. So that's like my overall, like, just high level view of it. And then we're going to dive into the specifics. I'm not necessarily the biggest fan of the DLL rule, but that is the trade-off for getting rid of the MAE, for getting rid of the 5-to-1 risk to reward. There's a lot to talk about with it. There's a lot of changes. So if I'm not speaking about like a specific thing that you want to talk about, I'm going to get into it. I'm just trying to give you the higher level stuff. All right. But I do need to also pay attention to something. Hang on. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, mother. Oh, brother. I do not feel good today, team. I do not feel good. Your boy's sinuses are effed up. Bullish in the Mag 7 and actually bullish in the S&P 500. So out of the gate, we're seeing some strength. This is the current real-time options flow. You have people basically getting out of puts, probably locking in their put profit. And then on the Mag 7, you have people getting out of puts, selling puts, and buying calls. So it's the old twofer.
Order filled. Order submitted.
All right, I'm taking a position here. What time is it? 9:44. I messed up. I forgot. There is a report at 9:45 right here. Manufacturing numbers are about to come out. Shoot, I should have waited. All right, I have tight risk. So if I'm wrong, it's not going to be that bad.
Those are liquid tankers. An arrow means it's underway. A dot basically means it's at anchor. You can see in the top part, there is nothing, no red in the Strait of Hormuz, the narrowest part there at the peak.
I have 5 seconds.
If we begin to see ships go through there, and at some point they will have to, whether it's with a naval escort or some sort of ceasefire agreement, because right now the insurers are saying, no thanks.
Go the other way.
Once we start to see ships go through that port,
go the other way,
that hole, whatever you want to call it, then we will see the price of oil and natural gas probably come down a bit. But right now, it's not closed, guys. I don't like that term because it's not a canal. There's no gate. There's no lock on it. But yet it's too dangerous or too expensive to go through.
Go.
Out was saying 4 things to watch with oil. Number one, the number of barrels disrupted, the length of time of the disruption. Does the Trump administration do anything around the SPR? Remember that, Strategic Petroleum Reserve? And, of course, the question...
Stops at break even, freebie play.
Carl, what comes next? No one knows.
Stop is at break even, freebie play.
On the phone.
Freebie play.
If you find out who's running Iran right now, let us know, because that controls everything.
All right, upside gap fill 952.75. 952.75.
Some of these drone attacks for the Saudis to act somehow militarily, that would be an additional wrinkle in this story.
75.
Brian, thanks. Brian Sullivan. We are getting
right
S&P,
there. That's the upside gap
fill.
fill.
A few moments ago, let's get to Rick Santelli.
All right, here's our boy Rick.
February final read on S&P Global manufacturing PMI raises up 0.4 from its original release at 51.2, 51.6. How does that comp? Well, that comps to 52.4, which was the January read. So it's still above 50, and that is a good thing. The last time we were below 50 was December of last year. And we see all the interest rates are elevated, and many have pointed towards past episodes of geopolitical issues being a flight to safety.
Get some Ricks in chat. This is our boy.
Seems to be paying
Rick
more
is such,
attention to the
he's such a baller.
cost of things like oil and potentially the cost of war. But ultimately,
all right,
the moves in
intraday
treasuries
high
were up
is
about 8
85
basis points in a 10-year. But do remember, the 10-year closed at the lowest.
There's
yield
also
since
a report at 10
October 24
a.m.,
on Friday.
so in 13
so there is
minutes.
Some of this kind of bounce energy involved, but we are above 4%. And
it's getting
if we look
close
at
to me.
two-year note yields, they're also
Come on,
up
hold it.
fairly equal shift on the yield curve. Short maturities and long maturities are all up about equal amounts.
Almost got
Street
me.
Return after a short break.
Almost got me. After a short... Dude, look how close that was. I am sweating. Less than a point away to knocking me out on that one. That was close, team. We're sweating that one. We're so wet in that one. All right, I'm going to pause that for a second. Where is it? Where is it? Right over here. We'll do this. We'll turn the volume off for 1 second. Wow. Maybe it's going to be a lucky week for me. As unlucky as I was on Friday, maybe today is going to prove to be. Look at that. Your boy almost got murked. Today might be my lucky day. Dude, do I need to buy lottery tickets? Do we need to do every single Kohrs poly market bet we can think of? Because your boy is clocking in high levels of luck today. High levels of luck today. Look at that. Almost got me. Not today, Mr. Market. Not today. I should probably put in an order for, where was that upside gap, Phil? What chart did I put it on? There's actually two upside gap fills on NQ. I want to clarify. Let me go to the 30-minute here. So you have one from Friday market close to Sunday market open last night at 24,952.75. And then there's actually another one from a while ago up here at 25,461. So if you're happen to be playing NQ, I just want you to know, I want it to be well known, well stated, there are two upside gap fills. Two upside gap fills, 24,952. And then there's another one, basically 400, 500 points higher, all the way up here from the market close on Wednesday, February the 25th. So obviously the closer one is right here. This is where we closed out on Friday, 24,952.75. And if you want to see the gap for yourself, I'll show it to you right here. Right about here. So you could see at 459.59, this is where we closed on Friday. And then when the market opened on Sunday evening, 6 p.m. Eastern, we opened all the way down here, 24,682, creating a giant gap. We ate away at some of the gap. You can see we're at 900 right now, but we still have about 50, 60 points to go, which is my major play of the day. But remember, I just want to stress this a lot, is I am playing this for free. My stop's at break even. If this market comes back and knocks me out, okay, I mean, I don't want that to happen, but I'm already up $300 per account. And on the flip side, if it goes, well, okay, I'm going to make all that money. Which, speaking of that, I should probably put in my order in case there's
Order submitted.
Something crazy happens. So if it goes all the way up, I get the gap fill. I'm front running it a little bit just because I would rather it get out than have it go to like 52 and not technically fill it. So I'm just putting it at the key level anyway. But that's the plan. Is worst case scenario, I'm out for a $15 gain. Best case scenario is I'm out for a $2,225 gain. So it's a freebie play. It's a free B play. Obviously, we are running into a little bit of an issue here at the psychological level of 24,900 flat. The NASDAQ is reacting to the $100 rung, which the longer you trade, the more often you're going to see these types of shenanigans. It loves reacting to the $100 rung. So we just hit almost 900, which once again, that's kind of why I protected myself just in case, whether it's craziness with the news. We had manufacturing numbers at 9:45. We're going to have more news at 10 a.m. It's all about protection. Folks, when it comes to you and your trading, what you're in control of is your worst case scenario. You're not in control of your profits. You're not. You don't know how much the market's going to go. You can't make the market go up. But what you can do as a trader is you are 100% in control of what is your risk. That is your job as a trader. You are protecting the risk of your account. So for me, I set the risk to 0. Technically, it's in the green by $15, as you can see. And I hope this bounces and I hope it goes, but it is not looking the best right now. It is. As much as I got lucky before, it might be coming for me. And this is a bummer because I feel like it knocked me out. Okay, so I got knocked out. It was a break-even trade. It maybe made me $10, $5, but it was a freebie trade. And the reason I'm getting out is because, I don't know, this could just keep going. It could dump all the way down to the 50% retracement. It could dump all the way down to VWAP. When you have a long at 24,840, I don't want to ride it down all the way to here. Let me show you this. The 50% retracement is 752. VWAP is 711. Now, I'm not saying it's going to hit those numbers, but I don't want to carry this position all the way down there if it does, because what if it doesn't bounce there? What if it keeps going? Okay, that doesn't want to be involved. The thing that I'm trading off here is the scenario in which might be happening right now of what if it's a fake out, knocks me, and then keeps going anyway? Then I might have a slightly worse off fill. But hey, sometimes that's trading. It's not going to be perfect. It's not going to be perfect. And I don't mind this, especially considering the fact that we have news coming out at 10 a.m. Eastern in about 6 to 7 minutes. I took a shot at it. It went up a little bit in my favor. Didn't hit my target. I don't mind it at all. I wanted really driving into everyone's mind that not every single trade has to be this amazing winning trade. Every single trade should be amazing through the lens of risk management. And sometimes you're going to take a little bit of a hit. Sometimes you're going to have a little bit of a win. And sometimes you're going to have a big win. But what you should never have is a big, big loss. That is what you are trying to protect yourself from. If you're wrong, be wrong small. And if you're right, hey, just be stoked that you're right. It might be small right, it might be medium right, it might be big right, but let the profits take care of themselves. You're in charge of what your actual downside is. So that's what I did there. Do I wish it kept going? Yeah, it never hit 900. That's the first level I would have considered getting out. Didn't hit it anyway. Got within 2 points. I was looking at the upside gap fill. Never got there. That trade just wasn't meant to be. It just was not meant to be. It is okay. It is absolutely okay, because remember, there is no pattern day trading in the world of futures. Absolutely no pattern day trading. Oh, here we go. What are we? Do I want to take this? Are we breaking this range? I'm watching this range right here. 810 to 850. Oh, brother. We do have a report coming out. It's not the end-all, be-all report. The first manufacturing numbers were somewhat decent. I like this potential higher low right here. We are getting ISM, PMI, and prices. The S&P Global came in better than expected. Oh, do I want to take it? Do I want to take it? My risk would be 40 points, $800. So if I'm wrong, I'd be in the hole by about $500. By about 500 buckaroos.
Order filled. Order submitted.
All right, we're taking a risk. These ranges are bigger. The volatility is higher. So I'm only doing one contract. I would prefer if volatility were lower, just to like kind of articulate how I would normally handle this if the ranges weren't so large. I would actually go long 2 contracts here, scale out one just below the intraday high, maybe front run it by, I don't know, anywhere from 1 to 5 points. And then as soon as that hits, I'd move my stop to break even and let the other one be a freebie runner. So that's how I would handle it if these ranges weren't so large. It's just right here, I'm long at 55. If I went long 2 contracts, instead of carrying on 45 points, it would be 90 points. That's a lot of risk. That's just below $2,000 worth of risk, which right now the accounts do not have enough buffer to carry that much financial risk. So just not appropriate. Of course, you could argue, but Matt just sized down, and instead of trading the minis, trade the micros, trade 10 micros, scale out of 5, and you could carry the same. Yeah, that's probably a better way to do it. It definitely is. I just didn't feel like switching up the charts, and this one's about to get clocked anyway. So regardless of if I went to minis or micros, if the risk is hit, the risk is hit. Oh, shoot. I was hoping there would be a little bit of excitement going into the manufacturer numbers since the ISM one was already good. There is a correlation if the first one is good for the second one to be good, but I would need to withstand whatever this pullback is that we're seeing right here. If you're confused what I'm trading the NASDAQ. I am long 1. Here's my average fill, and as you can see, I'm currently underwater, but I'm looking for a little bit of this trend line breakout here, which we are going to be testing soon. Oh, do I want to update my risk before we get into this? That might not be the worst idea. But is it the best idea? All right, we're back in the green. Obviously, on a push to 90 plus, I will be going stop to break even. And all I have to do is I coded up my own chart trader last week. I'm still working out some of the bugs, and as soon as I do it, I'm giving it to everyone in the Goonie Trading Discord, just because I think it makes life a little bit easier. I think the visuals are a little bit easier to deal with. But on a pump here, I do want to hit this button and get my stop to break even. Any word on the Apex payout? Nope. They are still reviewing my payout request. All right, but what I am waiting for is we have 2 minutes, 120 seconds until, oh brother, what is that low? 95. I wish I didn't have such a bad fill. That'd be 1,200. Do I want to move my risk up to 20? That takes $200 of risk off the table. That's $750. So that would put me down on $500 on the day. If I'm wrong, that's not that bad. $500 is very manageable, especially with this type of volatility. I'd feel way more comfortable if we take out 866. That's this recent high. It was the high that we pushed to as soon as I got in the position. I'm ranked 20 in crypto trading view competition. Crazy how much better you do with paper money. Respect for you, brother. Dude, congrats. That is awesome. That's really, really good. Dude, that is sweet. Good for you, man. What's the prize you get if you win that dimension? If you win that paper crypto competition, is there a prize? Like, do you get like a free trading view subscription? Do you get cash? What prop firms are you trading right now? I am trading Tradeify, Take Profit, Lucid, and FFN. And I also have some top ones that I'm testing out, but they're just not connected this morning. Just more months of subs. Hey, dude, winning's winning. All right, we are 30 seconds out from another drop of manufacturing data. We're about to get the ISM manufacturing PMI and prices. Let's see. They're going to probably bring back our boy Rick. All right. Is that running? It is running. The line in the sand is 51.7 and 60.6 for PMI and prices, respectively. The volume is on.
Good Monday morning. Welcome to Squawk on the Street.
We're getting going.
I'm Sarah Eisen with Carl Quintanilla and David
4 seconds.
Faber. We are live at post 9 of the New York Stock Exchange. Stocks are under pressure as as the markets react to the U.S. and Israeli
Go
strike
up, go
on
up, go
Iran
up, go
over
up,
the
go up,
weekend.
go up,
The
go up,
S&P
go up,
500
go up,
down
go up, go up.
0.5%. One bright spot in this market
Buy
is
the
energy
dip.
because oil
Buy
prices
the
are
dip.
surging.
Buy
Most
the
everything
dip.
else is lower, although information technology is holding
Buy
up well.
the
You've
dip.
got some strength in
Buy
names
the
like
dip.
Palantir, no surprise. Up
No
5%
big
from the
real
defense
movement
tech
quite
play.
yet,
Nvidia's
so I
higher,
can't
though,
complain
as
too
well,
much.
and so are some of the other
Of course, I would have
semiconductors, but
preferred a
consumer
big green
discretionary,
God candle,
that's
but
what's weak, down 2%. Communication services and financials, all the cyclical groups. Treasuries
sellers
also
at
making a move. They're buying
31.25
the
or
safe haven
buyers
US dollar, but
actually,
selling
excuse me.
treasuries
Shit.
potentially on this inflation trade, right?
Bounce
With higher
back.
oil prices, higher inflation, the 10-year yield
Bounce
goes
it
back
back.
above
It's coming
4%.
for me.
We've got full coverage of
No,
the war in
get
Iran,
away.
the impact on global markets. Great lineup of experts coming
Get
for
away.
you. Ian Bremer from the Eurasia
Shit.
Group, former Defense
That's not
Secretary
looking
Mark
so good.
Esper,
Order
Yeah.
former Israel ambassador to the U.S.
Nope, the numbers
Michael
must have
Oren.
not
We're
been
gonna get
good.
through all the key
Got
details
lucky
that
on
investors
one,
are looking
unlucky
for.
on the
First
other.
up, though, busy day for some manufacturing surveys.
Yeah.
Let's get back to Rick Santelli.
Here we go.
Rick.
Coming in actually way higher than
Now,
expected.
these are the ISM PMIs, and these are fresh February reads. On the headline, manufacturing expecting 51.5, in the rearview mirror 52.6.
Just
We come in
enough to knock me out.
52.4. And if we look at prices
The world of
paid,
risk
we'd rather
management.
have these go down, but zoom, 70.5.
Wow, this is gonna
ahead of
punish
the
me here.
60-ish. We're looking for 59 in the rearview mirror. 70.5 would be the warmest since June of 22. And if we look at new orders, 55.8, better than expectations, but lacking in terms of sequential. 57.1
Wow,
in the
that's
rearview
unfortunate.
mirror. 55.8 would be the weakest since Dece of last year when we were sub 50 at 47.4. And if we look at employment on a week where it's very key, we get the big jobs report
Order
this
submitted.
week. Well, 48.3 expected, 48.8 better than expected, and 48.1 in
submitted.
the rearview mirror. So it's better than expected. It's better than the rearview mirror. Here's the problem. It's the 29th consecutive month under 50. Interest rates are moving up. Parallel shift on the yield curve. The short end and the long end are each down about 8 basis points. Sarah, back to you.
Okay, Rick, thank you very much. Rick Santelli. So where do we look on a day like today? You have to start in the energy market because that is driving a lot of the price action and a lot of the concerns about the economic impact of this war. Look at Brent crude oil, for instance. That's the global benchmark. It is surging. Gas prices, especially in Europe, surging as well after Qatar made that announcement that they would be pausing. Remember, Qatar is a big gas supplier to Europe. What the market is telling you is that this is going to hurt inflation, the consumer discretionary travel stocks under pressure a lot this morning. You know, Wolf Research put out a pretty good analysis. They cited the Federal Reserve's FRB U.S. model for $20 increase in energy prices. For every $20 increase, you see a 7 basis point hit to the level of real GDP and nearly 40 basis point boost to headline CPI. Year over year. So they actually put out a projection of what, say, a $20 increase in oil prices would mean for CPI, for inflation. And you can see, I mean, there's an elevated effect.
We're having
for,
issues
the
just
better
below
part of the
900.
year. If this sustains,
Trying to not
Q3,
do it.
Q4, we're talking about almost 0.4% increases in overall CPI. They say general rule of thumb is for every $1
Can it hold this
increase in
breakout?
crude, there's a rise in gas
I'm
prices
trying to
of
dump
2
one,
to
obviously.
2.5 cents per gallon.
Bring myself
In
back
other
to
words,
break even.
Consumer feels it.
Go, go,
Meantime,
go.
the Journal
Go, go,
is
go.
putting together some numbers
Go,
on
go,
core
go,
PCE for
Fill
January.
it. There we
which
go.
already before any of this ever
Nice.
happened. If you look at the inputs from CPI, the inputs from PPI,
Good.
which was hot on Friday.
Brought my
you'd be
realized
looking at
from
the
a loss of
hottest core
750
PCE
to down 100, and I'm
since
currently
March of
carrying a risk of
24, roughly, at
$85.
3.1.
I know.
How big is this? I might need. Do I need it to get more room? I'm watching 900. I mean, I expected a smack. That's why I dumped one there. But I need to give it 1 second to breathe. I want to see a retest just because I see a lot of people selling at 900. I see a lot of people at 912. 912 is what I'm really watching.
First of all, it's a big.
I could do stop to break even
but also
because
feeds into other parts of the market like chemicals and everything like that.
or do I want to
Well,
leave this
Your
position
daddy over the
on?
weekend has what he calls a short war
But did lock one
scenario,
in. I went
in
long
which crude
2,
actually
locked
goes
in
lower
1,
after all of this is said and done. Which
do I want to take all risk off the
Roaring
table?
20s thesis, which has been long-standing.
I mean, that is a bold way to look at it. The only
my
the
real
only thing
goal
I would
is
say
that 52,
the message
the
that we
upside
had
gap
from President
though,
Trump over the weekend
at
is
952.
and this could take
So
a
there's still
while.
50
and so the
points
market
in this.
extrapolation is this could have a more pronounced impact, I think, on asset prices and on the economy. Just a few other places I wanted to highlight
Order
in the market
submitted.
right now that we don't necessarily do at the top of every show, but I think it's important.
YouTube
The
is not
US
receiving
dollar
enough video
surging.
to maintain
Dollar
smooth
is a safe haven.
streaming.
Remember all
How's
the
that
talk
possible?
and the worry that no, the dollar's not a safe
Are
haven
you guys
anymore.
okay over
People
here?
are selling the dollar. Guess what?
Hang
Times
on.
of turmoil.
We don't.
Buy the U.S. dollar. That's what the market
that's
is telling
obvious.
you.
Okay, we don't
right
need
now.
that. In terms of the stream, can you guys see me? Can you hear me? Is it all good? I just got a message from YouTube. Now, what about you guys? On Rumble, are you guys good? On YouTube, are you guys good? Because I just got a message. Analytics, stream health. YouTube is not receiving enough video to maintain smooth streaming. As such, viewers will experience buffering. Are you guys getting buffering? I don't think that's right. I mean, what I can see on my end is we're pumping through at 18,000 bit rate. The CPU is low. Looks good. All right. I don't know what that is about. Froze for a second. It's fine. I guess gold's taking a hit. Oil is reversing course here. Okay. I still need to manage this position. How do I want to manage it, though? That's the real question. At what point would I admit that I'm wrong? Do I just make it a freebie trade? Boom. Free trade. Locked it in. Well, the trade's not locked in. I locked in the free trade. So I'm taking on no risk. So I'm either making my $1,685, which would put me up $1,500 on a day, and I'd be more than happy to take that. I'd probably call it a day, but I'm taking on no risk. So if I get clocked out, I'm down for basically my scratch bullshit, down 100 on the day, which would be a bummer, but it is what it is. It is what it is. So I'm trying to let it run. I'm trying to let it run. I just don't want to take on any risk in case someone is dumping size at this level before the upside gap fill, because I know, like me, many people are paying attention to this upside gap fill. So just in case there's some front running, remember the close from Friday at 5 p.m. Eastern was 24,952.75. That is the upside gap fill. That is the upside gap fill in NQ, which is what I'm playing for. And maybe it hits later today. Maybe it doesn't hit at all, but that is clearly my target, which is why I'm selling it at 50. I'm front running it by 2.75 points, which is going to be a lot of money for me if I could actually hit this today. What are the tags you have on NinjaTrader chart that show your profit values next to the stop loss? Over here, it's called Order Line Decorator. It's an add-on that you could get for free. So if you go to Google and Google NinjaTrader 8 Order Line Decorator, the creator is Gemify, Gemify. It is free. Dude, I'm selling copper. It's on fire. I wouldn't sell it. Copper. If I had to pick out something right now that I'm very comfortable owning for the next 5 to 8 to 10 years, it would be copper. We have a serious lack of supply and a serious spike of demand in the world of copper. And I know we don't talk about commodities too much on this show, especially something like copper that's a little bit more obscure. I love copper. I don't have a crystal ball. I can't tell you where things are going, but I do know how to read basic trends where demand is going up and up and up and supply is going down and down and down. And when that happens, price should be going up right after it. So, and it's been going up too. I guess I'm just trying to make the argument that I think it's going to continue to go up. So I don't know what your time frame of trading is. I don't know if you're day trading it or something like that. But if you have more of a swing, shorter term investment position, I like commodities. I like copper. I like gold. I like silver. I think they're all going to outperform relative to their recent performance in the coming 3 to 5 to 8 to 10 years. Like, so if you're looking at like a multi-year hold, but maybe not like a full-fledged long-term investment, I'm actually very bullish, very, very bullish on commodities. And like I said, I think copper's a pretty evident one. What's a good way to go long copper? Oh, there's a ton of ways to do it. There's ETFs. You could buy physical. That would obviously require storage, but like so you could get physical, you could get ETFs, or you could keep playing the front month on futures and keep rolling the front month. Oh my God, my Bitcoin. What's going on with Bitcoin? Whoa, holy guacamole. Market open. Bitcoin has not looked back. Holy shit. Bitcoin, rippity skippity doodah, brother. 65.5 to 68, just like that. Wow. What a dude. This is what I said in the Discord this morning. This is what I said to you folks before it got going, is a lot of people think that with conflict, you have to sell off. And like, I get that emotional reaction. It's just all the stats tell us something different, which is why I tried to show you some of the stats this morning. But I mean, like, as much as I was fucking around, there's a very real reason yesterday I put this out there. Imagine how funny it will be when the market goes green. March 1st, 11. That was 23 hours ago. Folks, I legitimately think we could go green today. And we're actually not even that far away. I know at one point we were as low as 1.2%, but I think that's very, very real. Do you think I should cut it off early here and lock this in? Or do you think I should just let it run today? How many points can NQ still go to go green? It could go another 80 points from here, which would put us at 25,000 flat. The question is, am I cutting myself off 50 points too early? All right, so no matter what, I'm making 175. I'm down 110, so I'm going green. Get the 1K, update risk. I did update the risk, so no matter what, I'm going green on the day. I'm down 100. My profit's 175 in the green. So I'm going to end the day in the green. It's just a question of how much. It's just a question of how much. Honestly, I kind of like this play, because this would be about 1,500 per account. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So that's 13K plus another 7. So that's just below 20,000 on the day. I already made the scalp trade in FFN just because I needed another trading day there. How is this account? I kind of like it. Honestly, if this hits, I might just call it a day there. Like, just, that's bada bing, bada boom. We're not even an hour into the day. If that hits, folks, this might be it for me the day. I mean, just below $20,000 locked in, secured. It's not even lunchtime. When Webull shows their bullish, bearish dots on the chart, which with price targets, is there any truth to that? Definitely not. Folks, this might be it for me. This might be it for me. We might just be bing, bang, boom, locking this one in. My gap fill is 941. Am I reading this wrong? Yes. I don't know what you're doing that's causing you to read it wrong. I don't know what's going on in your life, but the gap fill is 5275. You have to look at the closing value. A weird amount of sellers right here at 45. At 945, someone is trying to sell 100 contracts of NQ, which is a good chunk for a random ass price. Yeah, they dumped it right there. And they're still there, actually. 24,945. Someone's trying to sell 103 contracts. 103 contracts. I'm taking 150K buyout from my job and just copy trading Matt every day. LOL, is that a good financial decision? Probably not, dude. I do have good days, but I also have some pretty fucking stupid days. I think I have one really stupid day a month. That's seemingly my recent cadence. is pretty good all month. There's on average 20 trading days in a month. I would say I'm good for 19 of them. And then it's on that 20th time that you got to not only steer clear of what I'm doing, but you want to do the exact opposite of what I'm doing. And then the fun game for all of you folks in here is trying to decide which one am I in. Am I good 19 of 20 or am I in my bad 1 of 20? That's the tough one. That's the real tough decision for you folks. Is like, is Matt on his shit or not? And I'll give you some hallmarks of knowing when I'm in my 1 of 20 rather than my 19 of 20. I'm trading a lot of contracts for no reason. I have no stops. I keep moving my stops further away from my entry. I am fighting the trend. If you look at generically the 1 minute, 5 minute, 10 minute, 30 minute, I am taking opposite trades of that. I am taking a directional position that is literally the opposite of the EMAs. Like I'm like praying for the trend to reverse. Those are all like the hallmarks that it is not going well for your boy. All right. I would love a bounce here. And actually, what was this? This was 95. Actually, that's not bad. A bad double down and then ride it up to 50. Not a bad. Do I want to do it? Nah, I want to make today easy. I want to make this a nice Monday. That pullback down there to 910, not the worst idea in my current setup because my average would still be below 95. I can move the stop to break even on both of those, and then I get the freebie ride of 2 contracts up to this 950 level. Once again, I would do that if I had more buffer. I would not at all have that's actually a good play, adding at 25 based on my current setup with this fill at 65. Not a bad deal at all, honestly. Yeah, because my average would be around 90. I could move my stop to break even on those. It's below this recent swing low, and then I get to ride them both up to 50. Or I could lock in one at 50, and then the other one could be a freebie ride. Like that would be easy play right there. Easy play. Dude, someone is still selling size at 45. Like a scary amount of size at 45, which we are not breaking through yet. Right here, 45, right where my cursor is. Someone's trying to drop 100 contracts of NQ right at that level. Wow. Do you backtest your strategies? Yeah, that's literally what I was doing all weekend. That's the only way to win at this game. I don't, like, people ask me that, like, that's like, oh my God, Matt, you backtest your strategies. How else would you know what to do? To me, in the world of retail trading, that should just be like the minimum thing you should do. Like to me, let's say, I don't know, what's a good metaphor here? I don't know, you're a basketball player and they're like, oh, you practice your free throws? What else would you do? Like it blows my mind. It literally blows my mind that people try to trade without having any knowledge of if their trading strategy is good or not. Like they're just literally betting their own hard-earned money that they dedicated their time to get, because that's how you get paid, is your time dedication to some sort of other service, most likely your job. And people are like, yeah, I assume it's going to work. I don't know, blows my fucking mind. I deeply do not understand. And actually, I would contest that you could not be net profitable over the long term without knowing your strategies for an active trader. Of course, it is very, very different if you happen to be an investor. Investing is easy. Buy the overall market, come back in 2 to 3 decades, and you're going to be better off. But I'm talking about active trading. I've never, ever on this planet met a person who is net profitable as an active trader over the long term, as in like they have multiple years of success from trading, not from selling fucking classes or this or that type of bullshit, without deeply understanding all the intricacies and backtesting of their system. It is a requirement. And I would have given you guys a break a while ago, like maybe 2 years ago, if you didn't have a background in coding and testing and statistics and Python and that type of shit. But now with the rise of AI, it is comically easy to backtest whatever strategy you want. Like with no knowledge of how to do it, You can get AI to do it for you. So at this point, if you don't backtest your strategy, you're basically just saying you're lazy. Red, shout out Red. I appreciate that. It feels like you missed your message though. So I'm looking for your message to see what you write. Strategy plus fundamental analysis equals 100% money printing. Fundamental analysis does not matter for active trading. Fundamental analysis matters for investing. Like truly, fundamental analysis does not matter whatsoever for day trading. Fundamentals need time to play out. Fundamentals have no impact on the next 5-minute bar, 10-minute bar, 30-minute bar. They have no impact on the next daily bar. There's a lot of noise in shorter time frames. So I fully agree. Fundamental analysis is very, very important for investing, but not for trading. Would I say, yeah, I would say on investing, you can do longer term swing strategies. So you could still use technicals and strategies. But once again, fundamentals have nothing to do with day trading. They have nothing to do with active trading whatsoever. Too dumb, need video. Well, luckily for you guys, I have a bunch of videos out there. Is your current strategy in your Discord? I have many strategies in the Discord, and I trade many other strategies. I mean, this is kind of what I do. I just work on and develop strategies. So are they all in there? No, but that's not because they're all good. Like some of them are net losing strategies. So I'm not going to put something in there that I know is like actively dog shit. But that's the point of being a like algorithmic systematic trader, is you're like continually testing time and time again. So I would actually say it's a positive that they're not all in there, because some of them are dog shit. And actually, in fact, most trading strategies are going to be dog shit. But you keep testing time and time again. Well, if this knocks me out, that's a bummer. But I will be net green if it knocks me out. Well, to just get that close, that's such a bummer. Looks like that seller, right where the buyers are now, the buyers are at 73 and my fill's at 74. Do I risk it for break even? I do see buyers at 74, 73. It's just, is it going to puke through and nail me? Right here, right where my cursor is, there's someone's trying to buy 113 contracts right here. I refuse to take on more risk than my break even. So I'm not going down below this level, but I am trying to give it like one little second to see if it can react. There's 73.50, 873.50 is where there's a bunch of buyers. So I'm trying to give it one little second, but like I said, I absolutely refuse to take on more risk than my break even. Come on. I'm giving it just this one little chance to bounce. One little chance to bounce. Most likely it's going to knock me out, but maybe I get lucky with those buyers stepping in. One little chance. One little chance. Is that all we need, team? We just needed one little chance. Wow. I got within a tick of getting knocked out. Look at that. It went as low as 66.75. My stop was at 66.50. We're fucking playing with fire today, team. But how did I know to do that? Folks, it's not guessing. Like literally, I just looked. Hang on, if this ever loads, I'll show it to you. I'll show you exactly what I did. Look it. I saw a shitload of people right there. I was like, oh, that's a lot of buyers. And guess what? We ran into the buyers, we consolidated, and we popped. Boom. Like it's not. This is spot gamma, this is Bookmap, by the way. So it just shows you where all the sitting buy orders and sitting sell orders are for people who are not doing markets. Obviously, you have to have a passive sitting order. So right here, for the longest time, I was looking at this on my other monitor, and ever since 10:07, someone was trying to buy a chunk of NQ. That's what this red dot is, or this red bar is all about. And I noticed that my stop was right above it, so I moved my stop to right below it to give myself a shot. Now, is there a guarantee? No. And like I said, I was refusing to take on actual risk. I wasn't going to move my stop below where I got in. And then the fact that it came within a tick, well, that's more of just like pure luck than anything else. But obviously, it was there was reasoning behind why I gave it a couple more points. It's just because I noticed that's where big players were doing. And remember, it's going to be big players, big money that moves the market. I wouldn't mind moving this up a little bit, but like I said, I'm not taking on risk. My stop's in the green. So you could argue it was definitely a bit of luck that it came within a tick and didn't knock me out. Yeah, that part of it's luck. But as to why did I move it down a couple points to my break even? Well, I'm looking at Bookmap. So it's kind of cool you guys got to see that in real time. What's up, Duck Gang? Hey, Matt, what's going on with Tilray? No idea. Pause for something. What's the lowdown, brother? No idea. But also, I just want to clarify, based on what's going on in the market right now, there's no way Tilray is like a top tier option. We all have a finite amount of capital, and based on all the things that are available to you in the market right now, there's no possible way that Tilray is a top tier opportunity for you and your capital at this moment in time. There's just too many other great things moving that I personally wouldn't have any of my money tied up in like a random political bet, because that's what Tilray is basically it's a race against time. Are they going to get I guess the federal clearance, if you will, before they run out of cash? And right now they're burning cash like no other. So it's a race against time. I don't see what the fundamental advantage is there. If you had an edge, it would be an edge in predicting, I guess, political outcomes. And I have no edge in predicting political outcomes, so I'm not going to try to do that. But I would say it's not even close to an efficient use of your capital. And that's not necessarily shitting on them. It's just saying you have better opportunities in the larger market right now. But they're just burning cash because they got caught up in the political machine. There's just better plays out there. I would love for this play to lock in so I could actually go over all the new Apex stuff with you. Folks, if you missed it, over the weekend, Apex completely revamped everything. They revamped their website. They revamped their offering. They now have end-of-day trailing drawdowns. They also have intraday. I'm going to explain why I personally believe the end-of-day 150K account is your best option moving forward. But of course, those are my own thoughts and opinions. We're going to be breaking it all down today. It just released. This is day one. Here's the TLDR. End-of-day drawdown, no payout denials, no MAE rule, no 5-to-1 risk to reward rule, built-in scaling, and 50% consistency. So all those things sound amazing. I'm going to be explaining some of the trade-offs, what it means, what it doesn't mean. I'm going to do my best to explain some of the rules, but it is brand new, hot off the press. Apex making some monster moves, and you can still have up to the 20 accounts, which is absolutely awesome. So I just want to call that out. And obviously, in a celebration of what they're doing, they're now running an 85% off deal. And you could use code Goonie, Goonie, to take advantage of it. We're going to be talking about it all week because it is that big of a deal. In the meantime, SPY and Qs did pop. We're pulling back a little bit. Bitcoin, big pop. Oil did get hit, popping a little bit right now. What about volatility? Volatility did take a hit, but it's popping a little bit as we're coming down. Is this going to knock me? Oh, do I just want to arbitrarily close this out? This has not been going to where I need it to go. I was trying to front run the upside gap fill. I was not trying to hit it exactly. It's at 52.75. I put my order in at 50. Unfortunately, we only got as high as 47.50, and now we're giving quite a bit of this back. I'm closing her out.
Order filled.
Closing her out. Pretty much break even on the day. Just like a little slippage, a little scalp stuff going on right now. I just don't want to take on the risk of this turning because I see a little bit of weakness, looking at the flow here. You can see the delta movement has slowed down ever since 1025. Right here on the S&P 500, you can see a similar thing. So we did rip till 950, then we ripped again till 1008. Ever since then, the delta flow is starting to work against me. So an opportunity to roughly get out for break even, that's what I'm going to take because we might be turning a little bit right here. We might be turning a little bit, and I would rather be safe than sorry. I'm not just going to arbitrarily hold on to a play and assume it has to work for me. So on a crazy day like today, when I have that chance to get out for break even, I'm going to take it. And then guess what? If we start to bounce again, I can always get back in. That's the beautiful thing about futures trading is there's no pattern day trading. But right here, 1, 2, 3, yeah, we could easily dip to 50% of this region. I do like the 30-minute breaking out. I hope that ES can hold 6836. I hope that NQ can hold 24,764. I want this breakout to hold, but I'm just trying to be patient. I wouldn't mind a deeper pullback, and if we get the deeper pullback, I can slap on another long. I don't want it to pull back too much, kind of like a Goldilocks porridge situation where I need it to be just right. Fuck. Is it bouncing right here? Oh, are we going to have to get into this again? I'm watching this downsloping trend line because what I'm seeing in a nutshell is we had nice higher highs, higher lows, and then it went into this shorter term trend of lower highs and lower lows, and I thought it was going to crack that, which it did, so it would have knocked me out anyway. But now, if it starts to gain strength again, if we're this most recent trend of lower highs and lower lows, if we start to see a fresh high off a higher low, well, I would love to take advantage of that again. I would love to take advantage of that. What are we seeing? But right now, nothing. Scalp or a scratch day for me thus far. Made a little bit of money over here. Did those ever get upgraded? The FFNs are passed. As you can see, I made 9K of profit on all of those. I'm just waiting for them to get converted. Audit review in progress. Link will be here once complete. All right, so I need to be a bit more patient on that, I suppose. Anyone else struggling to get onto the Apex website? Oh, I wonder if they have too much traffic or something. You know what? On that note, I don't know if I'm on the website right now, but maybe they're having some slight issues or something like that. But in the meantime, I think this is a good time to break down everything that's happening with Apex. So as of market open last night, 6 p.m. Eastern, Apex released an entirely new website. They released entirely new plans, and obviously the highlight is here. Welcome to the all-new Apex. End of day drawdown. Way better than the unrealized drawdown, aka intraday. No payout denials. That's one of the biggest frustration points with people on Apex of they trade, they think they're good, and then they wait for the request, and then all of a sudden it gets denied. So the fact that they're going to no denials and just kind of like an automatic system, that is amazing. No MAE rule. They switched that out with DLL, daily loss limit. Remember previously and even now, that's not a hard breach, that's a soft breach. So that means if you broke it, you don't lose your accounts, but you are either going to get denied for the payout, or in this case, you're just going to have to keep trading and you're frozen out for the day. No 5-to-1 risk to reward. They just got rid of it. Built-in scaling, as you're about to see, per account based on how much profit you have. You can trade more and more contracts. I like that. And 50% consistency. Previously, it was 30% consistency. So now you have a lot more wiggle room. So obviously, these are some of the major positive highlights. There's a couple things I want to get into just that are kind of new or maybe you haven't thought of before that might trip you up. So I want to break those down. But overall, that's the highlight of the new improved Apex. Once again, to celebrate the new Apex, use code Goonie to get 85% off. So first thing you need to know is they have two new types of accounts. They have end of day trailing drawdown, and they have intraday trailing drawdown. Technically, they have three types because they have all the legacy. If you had accounts that were live before this, you get to keep them. If you had evals that were live before this, you get to keep them. They are not disappearing. If you already have them, if you had an existing account, you get to keep them. So they're there. So I just want to be clear that technically they have the brand new EOD. They have the brand new intraday and then all the legacy. If you have a legacy account, it is yours. You get to keep it as long as it is live, as long as you're trading it, as long as you're paying for it. So through this breakdown, I'm going to be sharing what's going on and also my own opinions of why I think the EOD, end of day trailing drawdown, is your best option, specifically the 150K account. But I want to clarify, this is my own opinion, and you should use the accounts that are best for you and your trading and increase the chances of you getting a payout. I want to be very, very clear about that. So anyway, we're going to be going through it. end of day evaluation. So similar to before, you have to take the test, pass the test, and then you go to funded. And then if you do well in funded, you can move to a live account. You can get payouts as early as the funded section. And then obviously, of course, you could get payouts. Hang on. My Icarus is about to trigger. Do I want to take it though? That's the real question. Icarus is about to trigger. All right, EOD evaluation at a glance. No intraday trailing drawdown. Before, based on your maximum unrealized profit, that was what your drawdown was measured against. They're getting rid of that in these type of accounts where it's basically just your account value at the end of the day or the start of the day. If it's a brand new account, it's being measured from there. So I have many videos talking about the intraday trailing drawdown and how it's the rule that messes up most people. So they got rid of that, which is good. That's going to be easier for you. But as you're about to see, they did institute a DLL to replace the MAE. Once again, this is a soft breach. Basically, if you hit that drawdown in a day, you don't necessarily lose your accounts, but you are frozen out for the remainder of the day. Anyway, end of day drawdown calculated once per day at market close and enforced following trading days. So basically, if you run up $500 and then previously, if you ran up 500, that is the number that your drawdown would be measured against. Now, if you run up 500 and come back down to break even, it's only going to be measured against what your account was at market close the previous day. So I like it because I think that's going to allow people to do more quote unquote realistic risk management. So you could take a bunch of like break even trades in a day, i.e. managing your risk, and you're not going to get punished for it. So I'm obviously going to be a big fan of that. Fixed position size during evaluation, no minimum trading days required, may pass in one day. I'm seeing confusion about that. Yes, you can still pass the evals in one day. 7 calendar days to activate PA after passing. So that's just more of a logistical issue of like, if you passed it, you have 7 calendar days to actually upgrade it from eval to funded, just so you know. So they did change the rules a little bit. The daily loss limit and the is brand new. So this one right here, let me zoom in just so you can see this a little bit better. This is brand new, the daily loss limit. So if you've traded sim to funded firms, you've probably heard about this in the past. This is new for Apex though. So it's not brand new in this particular industry, but it is new for Apex. Previously with Apex, your daily loss limit was basically equal to your max drawdown. So the daily loss limit, if you hit this, you're frozen out for the rest of the day, but you don't lose your accounts. And then obviously you do lose your accounts if you hit the max drawdown. But the fact that they put this rule in, so if you go down 2K on the 150K account, your account is just locked for the rest of the day. You don't lose it unless you've also hit a max drawdown of 4K. So 2 consecutive days of the daily loss limit and the account is gone, obviously. So that's new. But then the trade-off is it's not unrealized intraday drawdown. So hang on. Icarus is about to fire. Do I want to take it though? I think I have to. Do I want to? I haven't taken it yet. Icarus is going to fire long. It's about to fire long. Mag 7, it is looking strong. SPY maybe bottoming and popping here. 5 minutes bullish.
Order filled. Order submitted.
All right.
Order submitted.
I did take the trade. I'm taking this breakout trade. I'm long 2. My risk is close. I'm trying to scale out one at 925, and then I'm still going to hold the other one for the upside gap fill at 52.75. So we're playing this one with a little bit more risk, technically, because I have 2 contracts. But because I have 2 contracts, that'll allow me the ability to scale out. Once again, trying to scale at 925, and then the other one could be a freebie runner. So that's how I'm choosing to handle it. What is this? Let's lessen the risk even more. All right, the risk is 930. Obviously, if this hits, that'll put me in the money 500, and then the other one will put me up like probably a little bit over 1,000 if we get all the way up there. So that is the trade. I just want to be transparent about what I'm doing. Obviously, you're going to hear the audio if anything gets filled, and you know my stops and my positions, but I do want to keep explaining this. So anyway, the deal is new. and it will freeze you up for the day. But then the trade-off is the fact that it's not the intraday unrealized high. So having both of those together is really tough, the intraday unrealized and DLL. But the fact is they got rid of it, at least for these accounts, which is what I like. Max contracts, they changed that. But honestly, if you were trading more than this, especially in the funded, I think you were doing something wrong anyway. Access period. So this is also a brand new thing for Apex. 30 days. So basically, you don't have to worry about like the billing or anything like that. As soon as you buy an eval, either you are passing it, failing it, or it's going to 30 days. And at the end of 30 days, it is over. And I saw a little bit of pushback on social media of like, oh my God, but if we're trading consistently and we have it more than 30 days, like what's the issue? Who is ever owning a eval for more than 30 days? That absolutely blows my mind. So I'm perfectly fine with this, because if anything, I would say it's a bigger issue that people forget they have a live account and they get rebilled for it, and then they get angry that they got rebilled for it. So I'm happy with that. On the evals, there's no consistency, and on the evals, there is no scaling. So yes, you can pass in one day. On a 150K account, you just need to hit 9K in profit without hitting your daily loss limit to get frozen out for the day, or you would lose the eval if you hit your max drawdown. On a 50K account, you need 3K in profit, is which it was before. The max drawdown, though, is no longer 2.5K. It is now 2K, which is the industry standard. Before this, Apex gave you slightly more drawdown. Now they're basically doing the exact same numbers that everyone else is doing. So they're trending in a way that's not necessarily good for you, the trader, but they were already being the most generous prior to this. And now they're basically just saying, hey, for all these new rules, especially because we're doing end of day drawdown, we're just going to go with the industry standard. So I just wanted to share that. I wanted to call out some of those nuances. Trading rules, basically just
order filled.
Oh, hang on. Locked in one. Free trade alert. Hang on. Let's make an announcement. Bada bing, bada boom. Free trade alert. So stops now at break even. I'm already up 500, and I'm just going to let this puppy run. So there we are. Anyway, where was I? Obviously, prior to this is important. Please listen up. Before this, one of the most common ways to pass the Apex accounts on evals, and you could never do this on performance, but you could do it on evals, was go long in some accounts, short on other accounts, max contracts. You cannot do that anymore. You used to be able to do that on evals. You could never do it on funded. Now you can't do it at all, ever. So I want to be very, very clear about that. You may not pass evaluation accounts by hedging them against each other. Evaluations must be completed using independent directional trading, not offsetting positions across accounts. So what does that mean? It means you can't go long NQ in some accounts and then short NQ in other accounts. Prior to this weekend, you could do that. Once again, just for evals. You can no longer do that. You can no longer do that. Can you pass an evaluation in one day? Yes. Is there a time limit to reach the profit target? Yes. 30 days. Does hitting the daily loss limit fail my evaluation? No, you get a soft breach, frozen out for the day, but the only thing that's a hard breach is actually hitting the max drawdown. What happens if I touch the EOD threshold? You failed the test. When does the trading day reset? 6 p.m. Eastern. Does DLL affect my EOD threshold? No, technically not, because it's going to be measured from where your account ends that day. So it does in the sense of where you close out that day. But intraday, it's just a soft breach where you get frozen out. Does the 30-day access period apply to PAs? No, it does not. Obviously, you can keep trading and trading and trading. Okay, so that is for your end-of-day evaluations, which is one type of new account. The other one is the intraday trailing drawdown. So I am a bigger fan of the first one. I just want to be very, very clear. I think the EOD is a better one to have. Actually, hang on. Before we go to intraday, there's other things to go over here. EOD performance accounts, EOD PA at a glance. Once again, I'm focusing on these because I do deeply believe these are the better options for me, for you, and for everyone. No intraday trailing drawdown. Awesome. Great. That's a huge positive. I mean, how many times have we all lost an account because of the intraday drawdown for it to go in your favor anyway? EOD drawdown calculated once per day at market close and enforced intraday. Someone's telling me to move over There. Sorry about that. I was blocking it with my big head. Daily loss limit enforced intraday. So you still have to do the DLL. That's a new thing. But once again, the trade-off is it's not an intraday drawdown. Tier-based scaling. So basically, based on your amount of profit at the end of every day is how many contracts you could trade. 100% payout. So all these other firms are doing 90-10, 80-20. If you are on Apex, 100% of the payout is yours. So right here, max end of day drawdown, 4K on the 150. I'm going to focus on the 50 and the 150 because those are probably going to be the most two popular. I think the 150 is the best, but I'm going to focus on the 50 as well just because I know some of you in here are going to be trading it. So the max contracts is less. Previously on the 50K, you could trade up to 10. It's now only 4, and you would scale up to 4 based on your profit levels. On the 150K, you used to be able to trade 17. It is now 10. DLL, yes, you have DLL. Inactivity rule, yes. So basically, there's I don't know how many people really run into this issue, but basically, you don't want to not trade. And remember, that could even count as a quick little scalp trade. Just get in and out. But if you go too long without trading at all, they're going to freeze your accounts out. So that is basically just be mindful of that. That's a new thing. How many PAs can you have? You can have up to 20. Is a performance account a live account? No, it is technically SIMDA funded, but if you do well, you can still get payouts. Does hitting the daily loss limit close my PA? No, it is a soft breach. No, soft breach. The only thing that closes out your account is hitting that max drawdown or obviously violating their other important rules. Can my position size increase? Yes. As you make more profit, it does scale out. Do I keep 100% of my approved payouts? Yes. And now they are looking to automate that, which is very, very good. So that's for the PAs on EOD. The drawdown explained, it's super simple. The one before this was the complicated one, where if you went up $1,000 in a day and came back to break even, it was no longer measured off that break even. It was measured off of that, the high point of the day. Now it's just measured off the previous day's closing value. And if it's a brand new account, obviously the starting value of that day. This is a huge, huge advantage to you, to me, to all traders. This is a monster advantage. I don't think there's much confusion on this because that's kind of easy to understand, but please let me know. And then the end of day payout. So this is, if you choose this account type, this is how these payouts work. Up to weekly payouts with 100% payout split. Previously, you had to trade for 8 days. Now you only have to trade for 5. So pretty much in almost half the time, you can now get payouts. Minimum 5 trading days to meet the required minimum daily profit. Minimum payout $500 each. 50% consistency. It used to be 30, so this is even better because if you have one really good day that accounts for half of your profits, you're still A-okay. Before this, if you had one day that accounted for anything over 30% of your total profits, they would not allow the payout. So you are good there. That's another very big positive. Maximum of 6 payouts per account. So this is another thing that is brand new that is causing a little bit of a kerfuffle, if you will, in the world of trading. So let me explain that. Minimum trading days 5. That's a big improvement. You can see here to request on the 50K, it's the same thing, 52.6. On the 150K, 154.6. Those are the same numbers. You're just allowed to now do it faster. Minimum daily profit. This is a new thing. Instead of 5 trading days of $50, it's now 5 trading days of $250, but you don't need on top of that the extra days. So they did increase it. Instead of people scalping the 50 up or down, it's now up to 250. The trade-off there is instead of 30% consistency, it's 50%. The safety net's the same. The minimum amount is the same. But what's interesting, and please screenshot this, they have a new amount that you can request per one. Before this, it used to always be the same. It always used to be you could request the 2K on a 50 or whatever it was. But for every payout, the maximum amount was the same. It now scales. So on the 50K, your first payout, you're capped at 1.5. Same thing on the second. But then it goes to 2, 2.5, 2.5, then 3. On the 150K account, it grows from 2.5K all the way up to 5K. So the max amount you're allowed to request per payout is based on the payout number, and it does scale larger and larger and larger. This is a new thing for Apex. For Apex in the past, it was basically the average middle value, and that's just where you were at. So I did the math on this. So on one account for an end of day for the 50K right here, If you add all these together, it's $13,000. If you have 20 accounts, which you're still allowed to have up to 20, to go through all 6, that's $260,000. On a 150K account, which I think are the best accounts, it's $20,500, $20,500 per account if you add all these up. And then, of course, you're allowed to have 20 of them. So that adds up to $410,000. So if you do a full cycle on a full amount of accounts, i.e. 20 accounts, you can get $260,000 on the 50K accounts, and you could get $410,000 on the 150K accounts. And then after that, this is how soon can I request a payout? 5 days. Do the 5 trading days have to be consecutive? No. Does each of the 5 days have to make the same profit? No, just at least 250. Is there a time limit to complete the payout requirements? No, but you don't want to get hit with the inactivity. So if you're not trading for a bit, you should still do like a scalp trade every once in a while just to keep your account like within good standing. What is the minimum payout amount? $500. What is the safety net? Same as before. 50% consistency. That's a good improvement. Used to be 30%. Can I keep trading after submitting a payout request? Yes. What happens if my payout is denied? You just have to keep trading until your account is within good standing. How many payouts can I receive? 6. Now the question right now is, after you receive 6, what happens? Path to live coming soon. There's no information in here. This is one big unknown that we still currently have with the new Apex system, is what does the live trading look like? So based on early communication from Apex, when you complete your 6th payout, after your 6th payout right here, hang on, you go through 1, 2, 3, 4, 5, 6, which at minimum is 30 trading days. Because remember, each one takes 5, at least 250. So the fastest you could do it is 30 trading days, which calendar days, that's about a month and a half. After that, we know that one of two things is going to happen. You're either going to get asked to go to live, where you're trading like real live capital with Apex, or they give you your money, which once again on the 50K accounts could be up to $260,000, and then on the 150K accounts could be up to $410,000. So you're either going to keep all that money and go to live, or you're just going to restart the process with fresh evals, go to PA again. So there are people who I could understand are being upset that it seems as if there's no more uncapped potential, but there is. Because remember, you could always go to live, and then of course in live there's uncapped potential. So I have to admit, when I first heard about this and read about it, I understand my knee-jerk reaction as well was like, bro, I want the uncapped thing. But remember, on the live accounts, that's really the purpose of a live account, is it's fully uncapped. So this idea of like somehow Apex is limiting everyone and you can't make uncapped anymore, yes, you can. Yes, you obviously can. In fact, the fact that you go to actual live, they would love for you to do well, because now you're officially in a live account. Granted, if you're in a funded account and you do well, that's money from Apex because they're paying you out this and it's SIM funded. But live would be the opposite. They would want you to do well there. So this idea of they're getting rid of uncapped, not technically, they're just shifting it to live, but yes, there is still uncapped potential. So everything we've gone over is for the EOD accounts. So once again, this is measuring the value at, it's the anchoring point of which you blow out. That's the end of day, which I would like very much argue is optimal. And then also, why I think the 150K is better is because you have to consider the daily loss limit. The daily loss limit of $1,000 on a 50K account, especially if you're trading NQ, is pretty tight. So you don't technically blow out, but your account is frozen for the remainder of the trading session, which is why I would say end of day 150K account is the best option for all of us. Now, maybe for some reason you trade slightly differently and you're like, you know what, Matt, I hate end of day. Let me look at intraday. And there is one big positive here that I'm going to show. But anyway, intraday evaluations, pretty much the same thing. There's not going to be a DLL there. So that's part of the trade-off. So really the question is, do you want to deal with the DLL or do you want to deal with the unrealized drawdown? That's up to you. So I know I was telling you which one is my favorite, but once again, that's a personal opinion. You need to trade what is best for you. If you either are picking daily loss limit, where you might get clocked there, or your unrealized high is going to be the measurement for the drawdown. That's what you have to do. So if you would rather no DLL, but it's unrealized high. That's obviously what these accounts are for. So it's just the measurement of where you technically fail. Rest than that, though, these accounts are all the same in terms of how many you're allowed to trade. The drawdown, the max drawdown is the same. The profit target is the same. There's no consistency to pass. You can still pass in one day. There's no scaling when you're in the eval. So that's all the same. Can I pass in one day? Yes. I mean, all these are pretty much the same. The major difference is the measurement. So if you go over to performance right here, so this is what I don't like about the intraday, is you have intraday drawdown and also DLL.
Order filled.
I just got knocked out for break even on my trade. So I locked in one runner there, and it did get that upside gap fill. So I'm green on the day right now, but unfortunately, it's taken a little bit of a hit. What I don't like and why I think the EOD accounts are going to be my favorite is because I don't want to deal with intraday drawdown and DLL. So I just want to, that's the main thing, and they still have the same inactivity rule. But so the drawdown is the same as it's always been for the legacy accounts. It's being measured from your unrealized high, not your end of day value. The one reason why you really might want to consider this, obviously, I've made my thoughts very clear that I think the EOD is better. It's because if you look at the payouts, they're technically higher over here. So if you're okay with DLL, if you are okay with intraday drawdown, and you trade well with that, the max payouts are higher. So on a 50K account, you can get $21,500, an extra $1,000. So if you do that on all 20 accounts, instead of $410,000, it's $430,000. On the 150K account, the max you can get per account is going to be 14.5 thousand instead of 13, so an extra 1.5K. So if you do that by 20 accounts, instead of getting a total payout of 260, on the 50K accounts, it's 260 up to 290 on these intradays. And then on the 150K, it goes from 410 to 430. So that's the trade-off, is if you can do well in this environment with intraday, which is more difficult, that's exactly why you can get paid out more money. So that's the one thing that I saw of wanting to point out. For me, I know my systems do better in this environment. Intraday with DLL, I just know my systems would have a tough time. So Icarus is firing already. Do I want to take it? Oh, Icarus. Icarus is firing along. It just fired along. So does it seem like we need 10 max each? I don't get the question. So does it seem like we need to max out each payment? If you want to get the max amount of money, yeah, that would be the obvious solution. You would have to max out each individual payment to obviously get the max total one, because you're only allowed 6 payouts. So if you don't do the max, obviously Icarus is firing. It fired bullish. I'm just trying to decide if I actually want to take the signal or not. If you have an old eval, do you still have it? Yes. If you have an old legacy account, whether it's eval or funded, you get to keep it and it stays legacy, at least to the best of my understanding. What does this change, if anything, to the need for buffer on PA? Well, once again, with buffer, you still have more room, especially if you have the end of day drawdown. You just have more buffer. If you do intraday, you're still battling with the DLL. Well, you're technically battling with the DLL no matter what. So even if you have a gigantic buffer and you hit the DLL, you're still going to get frozen out for the day. You're still going to get frozen out for the day. Oh, what time is it? It's almost 11. And then same thing here, path to live. From the information we know, you're either going to get fully paid out and restart, or you're going to get moved over to live. So the issue about the whole uncapped, no, technically it's still uncapped. You're just going to get moved to live.
Order filled. Order submitted. Order submitted.
All right, I'm taking the Icarus signal on this one. I'm looking at what's going on over here, and to me, I see the SPY took a hit, but I like how it's recovering. I see the Mag 7 holding its strength throughout the day. The 0 DTE is going a little flat, but the longer duration is recovering. So I'm just kind of going off this. So I took the signal. I was hesitant. Obviously, I'm looking for this trend line breakout over here on the SPY, which would be around... I'm looking for 860. So we're running right into this gamma. We overshot it, got knocked. Overshot it, got knocked. So we have lower highs, higher lows. We're basically waiting to see which way this consolidation breaks. But I'm looking for that break of 860. And then I guess, obviously, the next logical test would be the closing value, 6879, and then the high value from Friday, 6882. But once it gets up to 6879, we're officially green on the day, which I think is very, very possible. So I just want to call that out to everyone. What else do I see going on? I saw a little recovery there. This is going a little flat. Past the live. So I want to be clear. If you have a legacy account, whether eval or performance, it's yours. You keep it. Same rules to my understanding. There are two new accounts, EOD trailing drawdown and intraday trailing drawdown. Speaking through the lens of me and my trading, I will not do well with intraday trailing drawdown and DLL. I'm just not going to do well. And based on the size of DLL, I'm not going to do well with 50K accounts. So for me and my system, having all the data on how I trade, my best option is going to be the 150K EOD drawdown accounts. Right now, in terms of affordability, they are very, very affordable. I mean, they're running a monster deal, 85% off to do this. So if you look at it, and it's like, if you like the 50K account, like, I guess I'm trying to be very careful about my personal opinions versus what you do. Obviously, I implore all of you to trade wherever you think you're going to be most successful. I'm just sharing a little bit of commentary of like my best chances of success are on the 150K EOD
Order
accounts.
filled.
Oh shoot, I just got knocked out of one of mine. So I just wanted to be, I guess, like upfront with where I think the best account is. We don't have much information on live, and then there's also like murmurs of even more offerings coming out. I don't know how soon or not soon, and maybe those offerings are the live accounts. So waiting to hear about that. So we're getting a lot of answers, and overall this seems like a giant effort from Apex to get more to no payout denials and like almost like automatic approvals like we've almost come to expect from other accounts. So I'm a fan of that. I think one of the biggest knocks against APEC is like kind of lack of clarity of what the rules do or don't mean. So I think this step is simplifying the situation. So there are less questions. So yes, I'm going to be a fan of that. And it also seems like they're making steps to no more payout denials and more of that automated approval that we've grown to love across, I guess, the prop world elsewhere. So I'm a fan of that as well. So that's the big announcement from Apex. I've kind of let you know what the major rules are. We still have questions about the live accounts. I've let you know about my favorite account. Across the board, like taking this all in stride, I would say these are net good changes because it's going to cut down on the I suppose that frustration that comes with when you don't get approved for a payout, but then you're like, well, what rule did I break? And like the lack of clarity there. So I think this is going to make it a lot more clear. And I'm also seeing signs that they're trying to automate the whole, like, hey, if you request, you're going to get paid and you're going to get paid quickly. So I like that. I like that a lot. And then the one thing that I know is going to be difficult for my own trading is dealing with the DLL, which is why I like the 150K account, because then I could basically trade it like the 50K, except if I hit the DLL, I'm actually not blowing out. I still can trade it the next day. So it's more of just changing the account sizing that I think is the best. So that's where I'm at. Trump to speak at 11 a.m. Trump is speaking, you're saying now? Oh, that's a bummer. I just got wicked out there. That's a huge bummer. But also, if we can bounce off of 900, I will definitely take this trade.
Order canceled.
So just risk management. I need to be more on the ball. Are you sure we're allowed to buy another account after we finish the payout cycle? Yeah, those are going to be one of your two options. You either get moved to live or you restart the evals. That's like literally one of your two options.
Submitted.
And right now, I can only like guess on what the differential would be because they haven't filled out those sections yet. So like it's just guesswork of who gets moved to live, who has to restart.
Order filled.
We don't know. That triggered live again, long again.
Order submitted.
The intraday high is 58. This high was 47. All right, all done. What was the gap fill? 52.75.
Order submitted.
Okay, so with that all in mind, going over that, do you have any questions? Do you have any thoughts? I would love to hear from you guys. Like I said, I've made it clear that I think overall these are quality, positive steps in the right direction. And I'm actually kind of just a little bit more excited to see what the internals look like to the website in terms of the details that they give us as the trader. And obviously I want more of the information on the live trading. So I fully understand that this isn't the end of the story, but obviously it's also a pretty big update. So I just kind of wanted to get everyone's thoughts and opinions on this. Thoughts and opinions. Matt, are you going to stick with Apex and go live after your max payout? I don't know. In the interest of transparency, do any of these firms provide you free accounts to trade? They do give me free accounts, but they're free accounts that I can't trade. They're the free accounts that I give you guys. So when we do the Payday Friday giveaways, so yes, but they're also not accounts I can trade, if that makes sense. So do I get free accounts? The answer is yes, but I can't trade said free accounts. But what am I doing with Apex? I don't know because I don't know what my options are. I'm still waiting. No Apex related, but will you do a trading journey video? We've already done many. Any bot trading? Yes, I do a ton of bot trading. Lots and lots of bot. Oh, speaking of bot trading, this is a bot system that fires off my signals. Technically, I manually got into it, but I told you Icarus fired. So we did that. Watch this. This is a bot. Boom. Free trade, motherfucker. Free trade. How do you get multiple Apex accounts to trade simultaneously? A trade copier. I use Replicanto. Where's Trump? I have no idea. Maybe DC. I'm not Trump's handler. I thought you were Trump's handler. I thought that was your job. So I just got a fill at the upside gap fill, which already was hit. It wasn't still a fill, but I just put it at, oh, and I top ticked it too. 52.75 literally was the high, 52.75. I'd love to see a live backtesting session. I'm not going to do that publicly. That's the type of stuff that we talk about in the Discord. I mean, does Apex allow bot trading? Yes, they allow bot trading. But if you're trading, they can't be trading against each other. Like you can't be having a bot that goes long in one account and short in the other account. They have to be trading together. So no more of the hedging rule. They got rid of that. Any other questions? Questions. So anyway, if you want to check it out, code Goonie will get you 85% off. Brand new rules. I think it's interesting. I implore you to dive into the rules yourself, but you obviously know what I think is the best. I like the EOD trailing drawdown 150K account, which means they got rid of what, the 200 and the 300? They must have gotten rid of that. If you want to trade with me, GoonieTrading.com. We talk about futures trades, automatic trades. We talk about Piper. Speaking of that, Piper is still not fired. How is Piper not fired yet today? Oh, I see how. So we have some, basically the Goonie trading is for both options and futures trading, if that's of your interest. Here's a look at the flow. The SPY is improving. Mag 7's improving. 5 minute, 10 minute, 30 minute, 4 hour. No, 5, 10, and 30 are all bullish. 4 hour is not. On the NASDAQ, 5 minute, 10 minute, 30 minute is all bullish. 4 hour is not. I'm literally looking for the market to go green today. And in fact, I was so confident in that I tweeted it out yesterday, right here, 23 hours ago. Imagine how funny it will be when the market goes green. We've just seen it before. For the market to go green, we'd have to get up to 79, and we're currently trading at 66, about to take out that intraday high. I am a fan, very much a fan. Okay. That's what's the difference between Piper and Icarus? Icarus is for futures and Piper is for options. There's actually like not many similarities between the two. How much is a trade copier? I don't know. I think $150 for a one-time fee. Is there more info about your bots in the Discord? It depends what bots. I mean, dude, I have tens, if not hundreds of bots. But it's not one of these things where I'm just like giving away signals. I do share some stuff, especially that's been like thoroughly back tested, but it's more so to give you guys like a framework on the day of to be bullish or to be bearish with like actual stats behind it. You are the reason Apex revamped their platform. I highly doubt it. Did you get the 1 million payout from Apex, my guy? No, just waiting for them to make their decision. Who in chat is paying for Discord? You making money? Yeah, I mean, that's a good question to ask, but just to show you, like to give you guys a little bit of a sneak peek. So a daily degen report, 0. So this was, I post these trades in real time. I got in at 12:04, out at 2:39. I sold at 75, out at 70. So I think I made like $0 after fees. So that was Friday. I'm not saying every day hits, but then go to the previous day, Thursday. Remember, this is over half a year of the service in one day that theoretically could have been paid for. I post this in real time. I sold at 60, and then when I bought it back at 25, that was all posted in real time. In at 11:30, out at 145, $700. That would have paid for half a year of the service. If you look at the day before that, Wednesday, once again, I post when Piper fires. That's a option strategy. I post if I play options or not. I was in at 10:30, out at 11:30. That made $800. That paid for 2/3 of a year. My whole goal is for you guys to learn enough and find enough value in there that basically it's thought to be quote unquote free for you. That's my entire goal. So just want to put that out there. Did you stop with emailing? Nope. Emails come out all the time. Maybe you block the service or something, but I email you 6 days out of the week. I post all the trades, whether winning or losing. And then I also post on Sundays, the weekly report. But of course, what percentage of your Discord is profitable? I don't know. You'd have to ask them. But once again, that I don't know how much of that's in my control. I can only trade my own accounts. I can't trade their accounts for them. Like, what? If they choose to do other dumb shit, that's on them. Or if they simultaneously choose to do other all amazing trades, that's on them. I don't know if that's necessarily the best question because I am not trading them their accounts for them. I think a better question is, where are my accounts at? And I literally just did a giant post on, I was trading 2 options accounts in there very regularly for the month of February, and both of them were perfect. As in every single trading day, I made a profit in the month of February. I did not have a single losing day. Now, obviously, that is rare. I'm not saying that that's common, and if you're signing up, I'm not saying that you should think that that's going to happen all the time, but just to comment on literally how it went, those were all posted in real time in terms of the entry, and later when the exit happened, those were all posted in real time every single day. Ask anyone in the Discord. All of the trades on 2 accounts, a Webull account and a public account, were perfect, making about $20,000 on each of them, so it was $40,000 in total. So that, and like, I guess if you have questions on it, just reach out. Oh, not this one. Go to GoonieTrading.com. This is where you sign up and just come to the contact page. And if you have questions, this email will come directly to me. How's that runner looking? Good. Break even. Boom. So I'll be there today, this week. If you have questions, reach out to me. And folks, that's pretty much what I have for you. I appreciate all the good vibes. Here's a final look at options. Mag 7 are looking good. SPY got a nice flow alert. Momentum on the 5, the 10, and the 30s all bullish. The 4 hours attempting to push here. And Apex has a bunch of new rules. We went over everything that's known and new at this point, but obviously we are still waiting on the information related to live trading. And other than that, the market is up and away. I hope you are playing it well. I hope you're making a shitload of money. I'm going to be locking in this one at 25,000 flat, which is 1.7K on top of, ooh, do I need to go a little bit more? Because I would like for this to say, That's going to bother me because it's going to be like $50 off. There we go. That should be enough for them to all be 2K. But that's a little dangerous because what if it gets rejected exactly at 25,000? Whatever. My stop's at break even. I'm not risking anything. I'm up money. It's just how it is. 40K in options. Yeah, I believe that's what I was up on options. 40K there. Anyway, like I said, if you want to sign up, cool. If not, hey, it's your loss. But that's what I have for you. Thus far, today was an easy day, a nice day. I hope you're making a buttload of money. I'm going to go take as much as I'm legally allowed for Dayquil because I feel like shit. If you have questions, reach out to me. If you want to use that new Apex deal, use code Goonie. We're going to be posting content later on today and then streaming once again tomorrow, 9 a.m. bright and early. The only thing I want to remind you of at this time is at any moment, craziness could happen. Wow, my hair looks fucking nuts today. Dude, I feel like shit. I look like shit too. Jesus, I need to take a nap or something. But at any moment, craziness could develop and happen with the whole Iran situation in a positive or a negative way. So please just get ready for that. This isn't necessarily the time to be like sizing up and going for those hero trades. This is the time to literally do the opposite. It's the time to size down and really, really stick to your risk. Really stick to your risk. So I just want to call that out to everyone. That's what I have for you. I appreciate all the good vibes. I'll catch you in the flippity flip. Peace.